Namaskar, your presence for this week's economic brief is much appreciated. Now, this program looks at some impactful stories drawn from the economy, both domestic and global, with an Indian perspective. On the program, India is well on track to become the third largest economy in the world, absorbing AI opportunities. That's the emphatic message that India's delegation sends to investors at the World Economic Forum in Davos. IMF sees multipolar economic stability, projects steady. It projects steady global growth through 2026, in fact, driven by AI and emerging economies. Greenland tensions rattle markets. Gold soars past $4,860. Silver too is above $95 as yields climb. Interestingly, Greenland has significant high-quality gold mining potential. And the EU and Mercosur landmark trade deal, after 25 years, has critics warning of cheaper imports, environmental risks, and 200,000 jobs losses in Argentina. Well, before we move on to our top story, let's listen to India's Information and Broadcasting, Electronics and Information Technology and Railways Minister, Ashwini Vaishnav. He's highlighting how India has transformed over the last 10 years, and it's just a matter of time before India becomes the world's third largest economy. He was speaking at a panel discussion in Davos, Switzerland.
India will become the third largest economy in the coming few years itself. It's not a question of will it become, it's certainly, that's a certainty that will happen. It's a question of within next few years, we will definitely become the third largest economy. What's working very well is the last decade of very transformational change which has happened in our country, and it's a very well thought through, well defined and very focused execution. It's built on 4 pillars: the pillar of public investment in physical, digital and social infra, the pillar of making sure that the entire society grows along with the growth of the country, so very inclusive growth. Third, the pillar of manufacturing and innovation. Fourth, the pillar of simplification. All this combined with the base of technology that we have put, we can very clearly say that India is going to grow with 6 to 8% real growth and a moderate 2 to 4% inflation and a nominal growth of 10 to 13% with 95% confidence interval in the next 5 years. So that's the kind of growth journey which is there, we can say with a lot of confidence. And what's working very well is that the entire society is seeing the benefit of it.
And let's take a look now at some voices of confidence about India at Davos. India, is being seen as a global growth engine, and Blackstone, which is a large asset management company with about $1 trillion worth of assets under its management, it views India as the strongest global market. India, in fact, they say, is a long-term anchor for global investment, and we are seeing that investors are seeing India as a driver of sustained growth, pretty much what Minister Vaishnav was saying. Let's move on to our next slide, and this is in fact what Minister Vaishnav has been saying. He has been saying that India is recognized as a credible, reliable trade partner, and there's consistent delivery which strengthens global confidence, and there's trust also that has become India's most valuable global asset. He also spoke about the 5 layers of India's AI stack, which are, application is the first stack, then there's the model, then there's semiconductors, infrastructure and energy, and how we did hear him also talk about how India is technology ready for the next stage. He calls it Industry 5.0. Let's move on to our next slide, please. And that is what we are talking about, Industry 5.0. Rapid AI adoption is transforming Indian industries. These are a collection of CEOs as reported by CNBC. They were saying this, that digital public infrastructure is enabling innovation at scale, and India is emerging as a global tech transformation hub. So the applications of AI and technology are helping India to emerge as a global tech transformation hub. Moving on to our next slide. So India then is praised as what? The laboratory for scale. India is the laboratory for scale. Very indeed a perfect sort of a testing ground for other markets. Look at the size of our economy, the size of our market, massive market with about 600, 700 million strong middle class. That itself is the size of the US and some other countries put together, the entire populations. So companies innovate efficiently with limited resources, setting new benchmarks for global business practices. Clearly, India is an example, a laboratory for scale. And this is indeed something that in the digital world also we can see India's adoption of digital technology, the robust digital infrastructure that we have, 240 billion UPI transactions is enough to state that India is ready for this kind of investment. Our next slide, please. So investments are coming in. We already see Siemens has been in India for a long time. It continues to rank India among its top 4 global hubs, and they are manufacturing and infrastructure are globally competitive, they see. Now Siemens is a large engineering company, electrical major. It talks about engineering solutions for the railways, the Mumbai Metro, EV charging. All this are the areas that Siemens is very interested in. India is central to Siemens' long-term industrial strategy. Our next slide, please. Okay, so what does India gain otherwise? Apart from this, we can see that this is the words of, in fact, the Chief Minister of Andhra Pradesh, N. Chandrababu Naidu. He has talked about India's demographic dividend as a global advantage, and the skilled workforce, how it powers knowledge-driven industries, and how the talent pipeline is positioning India to meet future global demand. Clearly, also positioning his own state, Andhra Pradesh, as one of the areas for this kind of investment to come in. Our next slide, please. And the ABB, which is also another engineering major, they are also looking at India. They see India as playing a central role in their growth plans. Stability and resilience also make India a dependable market, and that combines high growth with long-term reliability. In fact, if we look at ABB, they are into automation, electrification solutions, making electric motors again, generators, transport, utilities, pharmaceuticals, all these kind of investments they are involved with. Our final slide, again, we are going to focus on our ministers who are there. In fact, these two are the words of the Minister for Information and Technology, Ashwini Vaishnav, and the Minister for INB. He said that India is shaping global collaboration, also not seeking entry, and he plays a key role. India is playing a key role in building global platforms. It's recognized as an architect for future global systems. In fact, India is increasingly seen as a strategic alternative to China. Now, before I introduce you to our guest on the program, let's listen to India's Minister of Communications, Jyotiraditya Scindia. He's speaking about India's progress in 6G. He was speaking, in fact, about Bharat 6G Alliance. Let's listen.
B6GA Alliance, which was set up by the Prime Minister based on his vision document for 6G, very early days in 2022, has been extremely active. It has grown from a group of 15 to 20 organizations to over 100 organizations. Our target is to be able to contribute 10% of patents to the 6G formulation, as and when ITU and 3GPP formalize that. That process is ongoing. We have 7 verticals within Bharat 6G Alliance that is working assiduously on technology, on equipment, on use cases, on policy making across the board, and that is something that I also review on a quarterly basis.
Dr. Nilanjan Banik, economist, professor at Mahindra University, Hyderabad, is joining us to help us understand this. Professor Banik, thank you for being with us. Now, to what extent has India positioned itself, to take advantage of the global trade transition that's taking place and the opportunities at Davos?
In fact, what the minister is saying, I totally agree with him because if you look into the long term growth rate for India, it has always been in the realm of between 7 to 7.5% of real GDP growth. Even if you look into the IMF database, IMF is kind of projecting that would be the growth rate for India's economy for the over the next 2 to 3 years. Now, this is not surprising because this growth is predominantly driven by services. And if you look into the type of development which is happening in the area of services, data in particular, because over the last few years, government was particularly involved in building what we better known as JAM Trinity, Jan Dhan account, Aadhaar enabled system of payment, and mobile transformation. In fact, the cost of data in India right now is around 15 cents as opposed to what you find in case of US, it is around $8. So you can understand that with so much less cost of
Right.
data and with access to data as well as internet telephony as well as UPI way of doing business, basically you are democratizing the way to do business where you are also seeing participation from small and marginal enterprises. You are also seeing participation from the agricultural sector. So what
Okay.
I'm trying to say is this service-led growth
Mm.
is impacting not only the services, but also manufacturing, agricultural activities, also the MSME sectors,
Sure.
which actually forms the backbone of the Indian economy.
Professor Banik, also growth, the momentum of growth we see is got to be maintained, and India is AI ready, is what the minister said. Economic resilience. There's also domestic demand, all these things. But are there challenges despite all these tailwinds?
One of the challenges what people are saying and which is actually not only particular about India but across the world, we are seeing the tantrum created by Trump's tariff. Now Mr. Trump is an astute businessman. What he is basically doing is he is taking 2 steps forward and then moving 1 step backward. He is basically testing water. Look what has happened with respect to Greenland. You mentioned about Greenland. Yesterday, he was initially saying that he is going to impose a tariff. And after that, while he was speaking at Davos, he said that the tariff on European Union, he is just taking it back. So basically, trade-related uncertainty is the only headwind that we are seeing impacting the global business order at this point of time. But
Right.
India, on its part, is playing smart because we are kind of diversifying. We have signed an FTA with Oman. We have signed an FTA with New Zealand. And my understanding is very soon we are also going to sign an FTA with European Union.
Okay.
Now, if you look into the trade figures, in spite of all this 50% tariff and things like that, you will notice that even for the month of November, India's trade figures has actually grown. It has not fallen. And what it tells you, in fact, if you actually kind of analyze what are the items on which Mr. Trump has imposed tariff, none of India's major export items to the US,
Yes.
for instance, refined petroleum product, pharmaceutical items,
Right.
electrical and electronics. On these items, there is no tariff. So he's
Yes.
also mindful of the fact that if he's imposing tariff on the items which are being used by the US consumer, that is going to lead to inflation. In fact, because of his trade-related, tariff-related things, already the inflation is climbing in the
Okay.
US.
So you see
And you
that
will
the economic uncertainties are largely related to Trump's economic policies. But let's move on to our next story. Stay with us, Professor Banik. Now, the International Monetary Fund is striking a note of cautious optimism as well about the global economy. The IMF expects growth to remain steady through 2026, and this resilience is because of a multipolar world economy, is what they are saying, where emerging regions, they are acting as stabilizers And innovation through artificial intelligence is actually reshaping industries and boosting productivity. Here's the report. The International Monetary Fund's latest forecast for the global economy is one of cautious optimism. Global growth is expected to hold steady through 2026 despite mounting trade tensions and geopolitical uncertainties. The IMF projects the world economy will expand at a moderate pace, avoiding sharp downturns that many had feared.
What is remarkable is how, despite of those risks, we see a world economy that is functioning quite well. One of the reasons for this functionality is that the world is truly multipolar now, and we have new centers of gravity, if you wish, that are also stabilizers for the world economy. We see more in the world that is creating better opportunities for the world economy to function.
Driving this resilience is the rapid rise of artificial intelligence. From boosting productivity in advanced economies to reshaping industries worldwide, the AI boom is emerging as a powerful counterweight to sluggish trade and supply chain disruptions.
We're seeing massive investment, especially in the US. That is supporting growth in the near term, certainly materially contributing to the economic performance of the US. It could be transformative, bring productivity gains. That's the upside scenario from AI, if you want. But it can also lead to a market correction, as we've seen in the case of past technological revolutions. When the internet was introduced, we had the dot-com boom followed by a bust.
The IMF warns that uneven adoption of AI could widen gaps between nations, leaving some economies behind. Inflation pressures, debt burdens, and geopolitical flashpoints remain potential stumbling blocks. Still, the IMF sees steady growth, powered by innovation. As the world navigates trade winds, artificial intelligence is proving to be more than just a buzzword. It's becoming a stabilizing force in the global economy. The Economic Brief, DD India. And Dr. Nilanjan Banik is still with us. Dr. Banik, given the IMF's observation that there are new centers of gravity acting as stabilizers, how sustainable is this diversification of economic power, you think?
So AI really has increased the productivity across any domain, in particular manufacturing and services industry that we are talking about. I'll give you a simple example. You see that there is a company named Waymo, which is basically running driverless car in cities in China. Now, earlier, what used to happen is if you are operating as a Uber or Ola aggregator, you need to hire a driver, and this driver will work for, let's say, 12 hours at max. Now, because of driverless car, the simple thing, what he's saying is the cost of running taxi services is coming down. And what it means, in a very simple term, it means the productivity of that particular sector has improved. I just gave you an example of automobile or the transport sector. The same thing applies to all other sectors, in particular biomedics, pharmaceutical, genetics, electronics, semiconductors. So basically, across board, what we are seeing an increase in productivity, and that is going to drive growth. Something what we have noticed during the time of Industrial Revolution, no one could understand that what would be the impact. The impact actually came 20 or 30 years later.
But Dr. Banik, given what you're saying, I mean, the IMF is also warning of a potential dot-com-like bust. Does that show inadequate research about AI on their part? Now, India, of course, is calling this Industry 5.0. Yes, go ahead, sir.
So far, we, even since last year, everyone is saying that there is going to be a bust. But unlike what we have seen in the case of financial crisis, most of the price increase in the AI sector is driven by the it's a fund which is coming, and it's not that these companies are taking debt from the market. It's the private equity fund managers who are funding this. So as opposed to the financial crisis which we have seen in 2008, I don't think there is going to be, or this bubble is going to get busted very soon.
Okay.
Because these are being funded by private equity funders and hedge funders, So, and meanwhile, you are seeing the impact of AI in terms of driving or collecting millions of data. For
Yes.
instance, even when we are teaching, these days
True.
you have Copilot. You don't need
Yes.
to actually learn any programming language.
I'm
The
afraid
Copilot.
we're running short of time. We'll have to leave it there. Thank you very much, Professor Banik. Thank you for joining us and helping us understand the importance of AI and and the economic resilience that it's causing in these turbulent times. Now, as geopolitical tensions spill into global markets, investors are rethinking risk. A standoff over Greenland is rattling ties between the United States and Europe, triggering sell-offs in equities and also a rush into safe haven assets. Gold has surged to record highs once again as confidence in traditional markets wavers. Diptanshu Kashyap reports.
The Arctic is in the spotlight, and not for the ice. Rising tensions over Greenland have shaken global markets, sending investors scrambling for safety. Gold has surged past $4,860 an ounce, while silver has climbed above $95. Greenland is not just strategically located, it also hosts significant natural resources, including high-grade gold deposits such as the Nalunaq mine in the south, adding another layer to the geopolitical and economic stakes. Equities are under pressure and even bond yields are climbing, with 30-year US Treasury yield above 4.90%, reflecting growing concern over US political risk and the stability of traditional financial safe havens. The flight to safety is clear. The US dollar index has weakened to 98.64 as investors reduce exposure to American assets amid fears of escalating tensions. Anything below 100 shows a weakening of US dollar. Major stock indices have retreated more than 2%, while tech and industrial giants face sharp losses. Analysts warn that the standoff over Greenland could trigger what some are calling capital warfare, with foreign governments and investors reconsidering US holdings, a dynamic that continues to drive demand for gold and silver. What began as a regional dispute has evolved into a global financial story. Safe haven flows are pushing bullion to record highs, while equities, bonds, and dollar reflect heightened uncertainty. Experts caution that rising geopolitical friction, fiscal concerns, and threats to US-Europe trade ties could have lasting repercussions for global capital markets. Even a remote Arctic island is now shaping the world of finance, proving that politics and markets are inseparable.
Gold shines as a haven amid uncertainty, but the ripple effects of Greenland tensions are being felt across equities, bonds, and currencies. Investors are reminded that in today's interconnected world, diversification and vigilance remain essential. In New Delhi, this is Diptanshu Kashyap for the Economic Brief, DD India.
Well, as trade tensions rise and tariffs return to the center of global politics, major economies are searching for new partners. Europe and South America have now sealed a long-awaited free trade deal pitched as a vote for multilateralism. But even before it takes effect, the agreement is facing protests and political pushback across Europe. Diptanshu Kashyap has more, and we'll leave you with this report. Thanks very much for watching the Economic Brief. See you again next week. Namaskar.
At a time when tariffs, trade threats, and geopolitical uncertainty are reshaping the global economy, Europe and South America are betting on deeper integration. After 25 years of negotiations, the European Union and the Mercosur bloc have signed a landmark free trade agreement, framed as a signal in favor of multilateralism. Leaders say the deal offers stability and scale in a world increasingly defined by protectionism and economic coercion.
This agreement sends a very strong message to the world. It reflects a clear and deliberate choice. We choose fair trade over tariffs. We choose a productive, long-term partnership over isolation. And above all, we intend to deliver real and tangible benefits to our people and our businesses.
If ratified, the EU-Mercosur agreement would create one of the world's largest free trade areas, linking the 27-nation EU with Mercosur members Brazil, Argentina, Uruguay, and Paraguay. Together, the two blocs represent about 20% of global GDP and a market of more than 700 million consumers. The treaty eliminates tariffs on over 90% of bilateral trade, sharply lowering duties on European exports such as cars, wine, and cheese, while easing access for South American beef, poultry, sugar, rice, honey, and soybeans into the EU market. According to European Commission estimates, EU exports to Mercosur could rise by 39%, while Mercosur exports to the EU may increase by 17%. By 2040, the deal is projected to lift EU GDP by 77.6 billion euros and Mercosur GDP by 9.4 billion euros. The agreement, however, has triggered a fierce backlash across Europe. Thousands of farmers from France, Belgium, Italy, and Poland fear mass inflows of South American meat and agricultural goods could undercut domestic producers, threaten livelihoods, and compromise health regulations, turning the pact into a major political flashpoint even before final approval.
It's essential if French and indeed European agriculture is to remain vibrant, sustainable, and viable across our territory in the years ahead. Each department has brought its members, not all of them, but some from every department, from all over France and from several countries. We have several nations represented here, and that shows it isn't only France that believes this situation is unacceptable.
Critics also warn the agreement could drive cheaper agricultural imports, expose uneven environmental and pesticide standards, and trigger job losses in sensitive sectors. In Argentina, analysts estimate up to 200,000 jobs could be lost as local industries, particularly automobiles, face increased competition, highlighting why opposition to the deal is emerging on both sides of the Atlantic.
While supporters see a push for free trade in a protectionist world, critics warn that the gains could come at a social and political cost. And for Europe, it underscores the challenge of balancing global ambition with domestic pressure. In New Delhi, this is Diptanshu Kashyap for the Economic Brief, DD India.